I know the Fed is non-political, non-partisan. They try to stay away from politics, but I do have to ask you, the election, does that have any impact on the Fed's decision that's coming up today or going forward?
Yeah, I don't think it has an impact today. I think the Fed is going to cut by a quarter point, as has been widely broadcast. But it definitely could have an impact going forward. We saw back in 2016, the first time Trump was elected, that at the Fed's December meeting following that election, they talked about it at length. They mentioned the election like 72 times in that transcript. And so I think you can assume that the Fed is thinking about this. It's thinking about how it's going to affect the economic outlook. And I would imagine in the current environment, they're particularly going to be focused on how the policies that President-elect Trump has proposed might impact the inflationary outlook. And in a world where it is more inflationary, you could definitely see fewer rate cuts. In fact, yesterday, a lot of economic analysts on Wall Street were really sort of marking down a little bit how many rate cuts they expect next year as a result of this election.
Yeah, we just had Richard Clarida on our air yesterday saying a very similar story. So you're mentioning potential policies. It sounds like you're talking about tariffs. I think most economists believe that would increase inflation here in the U.S. So if you're the Fed and you're looking at just that potential, how big of a weighting is it in your decision compared to the job market and also just price stability, which are their two mandates?
Yeah, so I think it's an important part of the price stability mandate because at this point we've got inflation almost under control. You know, PCE which is the Fed's preferred inflation index on an overall basis is at 2.1%. So sort of spitting distance from the Fed's 2% goal. But core inflation is still quite a bit higher, and inflation has been high for a while. And so I think that combination means that there's this sort of shaky foundation. And if you get hit with big tariffs that push prices up, I think they would see it as a real risk that you could see some inflationary pressures there. I think we saw this coming to fruition somewhat in markets yesterday. Inflation expectations moved up by quite a bit. And so I think the Fed has to be mindful of that. They don't want to lose control of this inflation victory that they are only just starting to taste. And so I think that is going to be a real point of focus over the coming months for the Fed. Obviously, tariffs are a tough thing to model, though. You know, there are a lot of moving parts there. It's hard to know exactly how they're going to impact inflation. So I think they're going to have to keep a careful eye on that.
You know, one other moving part is the rise in bond yields. Now, we don't know if that might actually be transitory. It actually could be transitory. It might actually apply in this case. But the rise in bond yields, how do they view that? And in your mind, do you think they see it as potentially offsetting some of the cuts that they would have potentially made? I mean, just how does that math work? Because the cost of capital just still is higher right now, even before the tariffs.
Market moves are always a complicated one for the Fed because they absolutely pay attention to them. Sometimes they'll try and say that they look through market moves, and I think that's probably true in the very near term, but it's obvious that they react to the fact that financial conditions tighten because that affects, you know, how the economy is growing. It does some of their work for them. I think in an instance like this one, where there's an expectation that some of this could be event-based, some of it could unwind as people sort of settle down and figure out what the future looks like, I think it's difficult to react to something like that. They don't want to make a big pronouncement and then have everything just change overnight. And so I would not expect to see any big reaction to this today. If it lasts, if this is persistent, if we are still here come, you know, December or January, I think that's a very different story. But I really think this is going to be about persistence of those moves.